I mean, the days leading up to World War One, it was a common belief that there was no way Germany and the UK would ever go to war together.
Yep.
They're the world's two largest economies at the time. They're each other's biggest trading partners. And the leaders were cousins. In fact, if you look through the lineage of family ties in Europe at the time, the Russian, the German, and the UK leaders are all cousins. And so no one thinks that it's possible. Why would they do this? It's a family. They wouldn't have a family feud. They wouldn't risk their economic growth. And you can apply that logic to what happened in Russia, too. Why would they alienate their biggest customer in Europe? They need to sell their gas and their minerals somewhere.
It's called e-gas.
And I think people think that about China as well right now. Why would China alienate Europe, which has become one of their biggest customers? Why would they alienate the United States, their largest trading partner?
Tomas, we are back, my friend. That music can mean only one thing. Chris Figgy in the house. What's up, my man? Let me explain.
Gentlemen, good to see you. I thought I was looking at one of those black and white cookies I see in like the Bronx on Arthur Avenue, but it's just you two gentlemen.
You can see them everywhere these days, too. Now they're everywhere.
The black and white cookie.
Yeah.
Yeah.
And they're not that good, but for some reason they're everywhere.
I love black and white cookies.
You got it. You got to get them when
You got to get them right out of the bakery.
Yeah.
Yeah, when they're soft.
Yeah.
Yeah.
Okay. Yeah, that's fair.
I love them. They have to be fresh.
They got cellophane on them. It's probably not.
100%. That is the key. You're right. You're right. And if you buy them in Chicago, throw them in the garbage.
Throw them in the garbage. Can't do them.
They're just absolutely horrible.
I see the same thing about Chicago pizza or pie or whatever you guys call that thing.
No. The Chicago pizza's great, but the black and white cookies in Chicago, throw them.
You don't call a pizza a pie? I grew up calling pizza pie. I'm going to go get a pizza pie. That's what's wrong with you people over there, you millennials. You guys, it's called a pizza pie. It's a pie.
Tomato pie.
Tomato
pie is completely something different.
Well, at Pepe's, they
At
call it
Pepe's,
tomato.
that's your little Connecticut, little like, hoity-toity little area. You got to change everything. It's been a pie since the beginning of time.
A pizza pie.
Pizza pie.
Tomato pie, they call it Pepe's.
ESP now 28, you've been saved.
Just for that reason. Yeah, 28 and then NASDAQ down. Yeah, ugly. You ugly.
You've been
Anyway,
saved.
all right, Mr. Vecchio, what you got for us today?
Why is that price action so ugly today, gentlemen? It really started overnight, and
Because it was out of, because yesterday was just stupid.
Perhaps. I usually think that's the case for most Mondays, generally speaking. But
We're in a cyclical market. What does one day just seems to give it back the next day.
yeah, we're sideways and shopping around. But perhaps the catalyst last night was news out of China, where the situation is getting increasingly worse because the window dressing they're doing is getting all the more ridiculous. We do see that the Chinese government announced last night with the youth unemployment rate now north of 21%. That's people in the age group of 18 to 24. It will no longer be publishing that data moving forward. Now, this is perhaps a small anecdote in a much bigger story, which is to say that the Chinese property market is becoming mired in a more difficult situation as each day goes by. Last week, it was announced that the largest private sector property developer, Country Garden, failed to make payments on two of its international bonds, totaling $22.5 million. Now, to put that in perspective, this is a company that made 441 billion yuan last year, which if you peg it to, say, a $7 yuan exchange rate, this is a company that brought in 60 to $70 billion in sales revenue in US dollar terms last year. And so when a company that large can't find $22.5 million in between the couch cushions, it raises some eyebrows. This month has actually been really bad for Chinese stocks. If you take a look at FXI, the large cap ETF, it's down just about 10% this month. Baidu is down around 12%. Baba is down around 9% itself. And it really does seem to be stemming from the fact that the world's second largest economy is rapidly slowing. This housing market situation is something that could actually tank the economy for quite some time. Just look at the comparison to the US, for example. In the United States, roughly speaking, the real estate industry is 17% of GDP. In China, it's closer to 30 or 35%. The statistics are obviously a little gray because the government's not an open book, and can we really trust any information coming out of China? But let's just say it's twice the size of that of the United States. In terms of household wealth, housing accounts for 70% of individual household wealth in China. Here in the United States, it's about 28%. And so you have a housing market slowing down that does not have new demand coming in because young people that are trying to form their families, can't find a job. So they're not forming those families. They're not buying those homes. And China, of course, also announced in the last week that People are no longer allowed to discuss the economy in negative terms. It's not falling, it's evolving. It's changing course. It's in a period of transition, but don't say anything bad about it whatsoever. It's these type of window dressing notes to me that remind me of what happened in, say, the fall of 2021. We had real estate concerns roil the market back then. Hard landing fears out of China began to pick up, and that seems to be the place where the market's going right now. So even though we have a little bit of rockiness here in the United States, I guess the question is, if you're a trader, if you're an investor and you're looking to put your money somewhere in this world, in these global financial markets, you're certainly not going to put it in the world's second largest economy right now. The U.S. may have its own problems, but it is the nicest house in a bad neighborhood right now, gentlemen.
The nicest house in a bad neighborhood is not a good thing, typically.
So, okay. So I don't, sometimes we agree on certain things and sometimes we don't see perfectly eye to eye. That's why we call this Let Me Explain. And that's why it's a little bit of a trade-off. So I actually bought Chinese stocks yesterday for the simple reason is that relative to U.S. stocks, Chinese stocks are cheap. I don't care about the fundamentals because I'm an efficient market theorist. So if everything you just described is true, then they're built into the prices already. Therefore, I like China relative to the U.S. Only because it's cheap relative to U.S. stocks. I think U.S. stocks are overpriced. Chinese stocks are relatively cheap. But that's only my first response. My second response is that what you just described in China is very interesting because it's a case study in what in why our democracy and our free market economy is so powerful and will never be, I don't believe it will ever be disrupted by China, or, it may be disrupted by a conglomerate of different, countries. It would eventually, when certain things could take place, between just a combination of lots of different countries in certain markets, but I doubt it. But the reason that China and Russia and certain places like that will never disrupt the U.S. economy, why the U.S. economy will always be the center of the universe as far as liquidity is concerned, is because we have this incredibly diverse economy and free market structure that doesn't allow us to have a concentration of risk. The biggest concentration of risk we have in the U.S. is a concentration of wealth. It's not a concentration of a sector economy. It's one of the reasons why, I hate to use Chicago as an example, but I think it's a really good example. Inside the U.S., if you want one of the steadiest economies, the reason Chicago is such an interesting city compared to as a potential to build a business or invest in something compared to other cities is because we have the most diverse economy in America. No business has more than 13% of Chicago's economy. So when you think about that from a sector side, it's kind of protected because, there's 8 or 9 businesses we're completely diversified risk-wise, where other economies are all about, it's either all technology like on the West Coast or it's all travel or whatever else it is. And so that's one of the beautiful things about Chicago's economy. Well, one of the beautiful things about the United States economy is that we have this wildly diverse, all these wildly diverse economic sectors where nobody has too big a play. Whereas China, like you just described, it's heavily concentrated and it's extremely dangerous because the government has it's not a true free market. It's a controlled free market. And so it's a government controlled stock market. So it doesn't work like capitalism is supposed to work. It doesn't create the same kind of free cash flow that we create here. So that's always going to put a lid on what they have, and it's always going to keep the giant pools of liquidity over with us. So I think what you said is kind of spot on, but I think that doesn't mean that China's not cheap relative to the U.S. Like, is BABA cheap relative to or is Baidu cheap relative to Google and Amazon? And the answer is, I believe they are. Are Chinese stocks that trade in the U.S. cheap relative to similar U.S. stocks? And I believe they are. I believe they're discounted to where they're very attractive. But, time will tell.
Well, what's your time frame? You say you think they're cheap. That's a valuation
trader. So I'm a short-term trader, Chris. So I don't. So like when anybody says, "What's your time frame?" My time frame is yesterday. You know what I'm saying? Like I don't have
today.
Or today. I'll hold positions for a year. I'll hold positions in some cases for 2 years. But when you say what's my time frame? My time frame is this afternoon. Like I don't have this. We don't do this show because Tony and I talk about stuff that may come to fruition 6 months from now. Like when we talk about the yield curve, we talk about it as if we're do or die this afternoon. When we talk about like a pairs trade like NASDAQ Russell, or we did China US, we're talking about it by, today to tomorrow. Our time frame is instant gratification. It doesn't work like that all the time, but our time frame is yesterday, today, tomorrow. That's it.
I have a hard time reconciling caring about valuations as a short-term trader because, quite frankly, markets can stay stretched and irrational for far longer than we may want to stay solvent.
Of course.
You bring up a great point about the resiliency of the U.S. I think so many headlines earlier this year were about tech layoffs or roiling the San Francisco market, right? And everyone's saying, oh, well, if Google and Facebook or Meta, if Apple are cutting all these jobs, it's just a matter of time until the broader economy gets dragged down. I don't know if folks saw the retail sales number this morning, but it is a 1% input for the GDP control group, which matters because that's how we get our GDP estimate. The Atlanta Fed, which has nailed the first quarter and second quarter GDP readings with their new model, their post-COVID model, has us tracking at 4.1% growth here for the third quarter. So forget soft landing right now in the near term. We're kind of re-accelerating, starting to boom a little bit in the United States. Now, how long that lasts, the bill will come due on these higher interest rates. Recession in 2024 can't be ruled out whatsoever. But the divergence between the U.S. and China right now is so fantastic and great. The situation, socioeconomically speaking, in China is deteriorating substantially. That, to me, brings up the potential risk of what happens with Taiwan. It's not on the radar right now. It's not something people are talking about. You haven't heard about, Chinese naval drills off the coast. But China will probably do something, in my opinion, that's going to introduce a little bit more risk to this market. Because what's a better way to solidify the national consensus around Xi Jinping and the ruling party than by stirring nationalism? And what's the easiest way to stir nationalism? Paint the United States as the big bad wolf who's deploying, all these types of military systems in South Korea and the Philippines, in Taiwan. And of course, they can't allow anything to happen with Taiwan. It can't be its own country. And so I think we're entering a period where China, just like with Russia, how they're failing in their war in Ukraine, it actually makes them a little bit more dangerous geopolitically. It introduces a little bit fatter tail risk to the scenario going down the line. They need a distraction. Yeah, and the situation in China is getting worse by the day. Yeah. It can't be ignored anymore.
I agree with you that they need a distraction, and I agree with you that, that I shouldn't say I agree with you. I understand your line of thinking, but I think that that's old school, and I think that after the Russia-Ukraine debacle for Russia and the complete obliteration of their economy, China is going to think twice about being as stupid as Russia. I don't think China's anywhere close to as stupid as Russia.
As strong as I thought it was either. Right?
Yeah, and I think that watching how the world just obliterated, Russia on essentially just sanction them out of business. I don't think that, and I don't even see a path to recovery for Russia. I think China is going to think twice before doing. I think that's a very traditional way of thinking, and I think that Russia's invasion of Ukraine, you could think that way. I don't think it's as easy to think that way right now, and I think that the amount of risk that China would take by doing something like that in Taiwan would be potentially disastrous for China, and it might set them back 10 or 20 years. And I don't know if the egos are as big in China as they were in Russia, but we'll see. I listen again. I agree with you that China is stumbling now. A lot of it is homemade. They messed up. they interfered with Mother Nature. Anytime you interfere with Mother Nature, you screw up the system. They screwed up the system and they set themselves back. And now they're trying to right the ship, but they're trying to right the ship. They have a lot of concentration risk. And concentration risk is really hard. And I think the real important takeaway here is, like, when you talk about concentration risk in the US, I really believe the only concentration risk we have in this country is wealth concentration. I don't believe there's, like, we have, economic concentration risk. So I just feel that's what's so interesting about US markets. And that's why they're so strong relative to everybody else in the world. And I don't see any of that changing necessarily, but that doesn't mean that the US isn't grossly overpriced relative to China. That's the whole difference. Like that's what I believe is the case. And listen, when I say I'm long China, my positions are crap. Like, they're small. Like, I'm short puts in Baidu, I'm short puts in Baba. I have a few other long. It's not. I'm not making a big bet. This is a crappy little bet right now. But I did do it yesterday, so the timing is appropriate for the discussion with you. I mean, the prices are much better today. Baba's down $2, Baidu's down $2. It's a much better pricing opportunity today, and I'll probably add to the positions. Not a lot, but probably add small.
Tom, you say that the thinking is old school. I'm going to make it even more old school. In the days leading up to World War I, it was a common belief that there was no way Germany and the UK would ever go to war together.
Yep.
They're the world's two largest economies at the time. They're each other's biggest trading partners. And the leaders were cousins. In fact, if you look through the lineage of family ties in Europe at the time, the Russian, the German, and the UK leaders are all cousins. And so no one thinks that it's possible. Why would they do this? It's a family. They wouldn't have a family feud. They wouldn't risk their economic growth. And you can apply that logic to what happened in Russia too. Why would they alienate their biggest customer in Europe? They need to sell their gas and their minerals somewhere.
It's called ego.
And I think people think that about China as well right now. Why would China alienate Europe, which has become one of their biggest customers? Why would they alienate the United States, their largest trading partner? But nationalism's a funny thing. It makes people do very odd, interesting, and often irrational things in the name of waving a flag.
Yeah.
And quite frankly, I would not be holding my hat and resting my laurels on a Chinese Communist Party to do what's best for the world. I think they'll do what's best for them retaining power, because that is their sole purpose for existing.
I don't disagree. And in fact, I thought Russia had absolutely zero chance of invading Ukraine, but we underestimated the sheer stupidity. Like, I guess I gave Putin more credit than he deserved and never realized how just utterly incompetent and stupid he was. I don't think China will make the same mistake, but I mean, listen, who knows? We all underestimated the level of stupidity, on the part of Putin. And it was really kind of a one-man show. I think China, although it is a very narrow leadership, I don't think I can't imagine, I can't imagine it, but who knows? We'll see. That doesn't mean that, I'm going to continue to go down the path of their equities cheap on a rotation basis relative to U.S. equities, which are not cheap. And that's it. I mean, we're just traders. Like, that's the difference. Like, I think that sometimes, and it's not a bad thing, but I think you and I look at things differently. I look at things as I'm a trader. That's it. And I think you try to look at things more holistically and, from, just more holistically. And I think that could be good. It could be bad. It just depends, my problem is I don't know how to put a holistic view into practice. Like, I don't know how to execute a holistic view, a macro view. It's very hard for me. I don't know what that means. I like to execute based on taking the opposite of other people's emotions.
Understandable. And I think it's interesting that when we talk about how the market is set up right now, Chinese stocks do look cheap, right? They have come down a bit. And the way I'm seeing my chart shape up, they could be an interesting buy to hold for a few weeks or a few months at some point in the near future. But the news flow is turning right now. And so I'd rather wait and risk being wrong for a little while and missing the exact bottom and feeling a little bit more confidence in the price action right now. Because the price action is just, to me, god awful. It's not good. This is a story that's still unfolding. I have a feeling it's going to be in the news quite a bit here over the next several weeks and months. China's property situation, again, such a big concentration of risk for the country, for individual households, that could have domestic political ramifications as well. And then how the Chinese government responds to that, they probably need to do something externally in order to, bang the jingoism drum.
Well, the only other thing I'll say about that in China is that what's the volatility in FXI right now? So when China, I always watch like
You look at it around 30.
around 30. Yeah, like the difference,
Relatively low.
30 is relatively low.
Well, I mean, it's an IV right at 14.
Yeah, I sometimes look at Chinese volatility versus U.S. volatility to help me, decide when that pair is actually,
More volatile than the U.S.
a lot more volatile than the U.S. Yeah, to see when that pair is actually, when the marketplace gets those volatilities way out of line. But the reality for me is again, I'm just going to come back to this as, just from a trading standpoint, and my biggest problem in China is I don't know, other than a couple stocks, I don't know how to trade it. I just don't know what to do in China. Like, I don't know how to trade China. Like,
And then it's a
FXI,
benefit from a move in Chinese stock.
yeah, like FXI to me, it's too damn hard to make any money in there, So I don't know what to do. Like, I don't know how to spread it off against US. It's just hard. So you got to trade Baba and Baidu and really, maybe a little bit of, no, that's really it. What else can you do? I don't know. That's my challenge. Which one?
EM, I guess, but that's
that's not
there's so many other things in there, and it's not just China. So
Yeah, that one's tough. FXI is really the only thing you can use, and I don't even know what it's doing today. Let's take a look. It should be down.
FXI down 48 cents, $27.18.
That's a pretty good size move. But anyway, Chris, listen, that was a good discussion. As we're talking, S&Ps are almost down 40 right now.
NASDAQ down another 60 points to down 125, so that's got to help you a little bit.
Yeah, and crude oil just dropped almost down almost $2.
Buckers are down $1.78 now.
Yeah, and some of the stocks that they had higher earlier today, like AMD and Coinbase and what was it?
Are all lower. It's a sea of red.
Yeah, Nvidia, which I rolled up my puts on earlier, is now almost unchanged on the day.
Unbelievable,
I
Nvidia.
stink.
All right, Chris, thank you so much for your time. Let's take a quick 90-second break and come back. We got a market measure next. Let's Tasty Live. Thank you for your time, my man.
Thanks, Chris.